All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And as always, we're so happy and grateful for each and every one of you being here with us this evening as we close out the week, taking a look at the technicals and the fundamentals to see what we can take advantage of in this beautiful thing they call the Forex market. So without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper for notes, and let's make sure that we continue to do an amazing job of participating and engaging. Do me a favor, everybody. Drop me a 1. Let me know you can hear me loud and clear so we can get going with this evening's session. All right. Cool. All right. So let's make sure I've got everybody taken care of with their microphone. As always, hey, if you're not making a comment, asking a question, let's make sure that we do our best to keep those microphones on mute. All right, so with that being said, let's get it going. Let's take a look at the calendar for today, the 23rd. So we got German, the flash PMI came through, right? We have a question straight out the gate.
Oh, what?
Let's just make sure we do our best to keep our microphones on mute, everybody, if we're not asking the question, right? So we've got the German flash manufacturing PMI came through at 52, still above 50, but it missed, right? So showing a little bit of contraction. As a matter of fact, I actually have an article regarding the situation in Germany and just a deeper dive regarding the PMI, okay, that I'm going to put in the chat. So if you want to learn more about it, you all can take a look at it. It's a pretty good read. It's very detailed, but it's good. But it's good to know, right? So that came through as a miss. We had Chairman Powell testifying today, just trying to continue to reassure investors, reassure the government they're doing everything they can to try to get inflation under control. And that was a pretty light day in New Zealand. You had a bank holiday. And then tomorrow you have Australia, you have the Reserve Bank of Australia, Governor Lowe speaking tomorrow. So not a whole lot, but when you flip over to trading economics, right, front page, Japan inflation rates stays at 7.5-year high. Okay. So this is an important report because they're really feeling the squeeze over there. High inflation, a weak yen. Okay, we posted a few articles last night regarding the situation in Japan. So it's starting to put a lot of pressure on the Bank of Japan and the Ministry of Finance to at some point do something, right? But they're kind of still in that everything's transitory type of mood. But it's seeming like it's becoming more and more permanent every day, right? As a matter of fact, it is. So we'll continue to watch that. But these type of inflation reports coming through is just, again, going to continue to put more and more pressure on the Bank of Japan. You can see here, Japan core inflation remains above BOJ target. All right, UK consumer confidence sets a new record low. All right, so people are really starting to feel it. There's always a point when inflation starts to go up. People are still spending because they don't feel it yet. But now, everybody's really starting to feel it, globally. So we'll continue to monitor things on that front. Take a look at the DXY real quick. Dollar still bouncing around. It's gaining a little strength here in the Asian session, but by and large, it's still bouncing around at this support level. So when you look at dollar trades, dollar setups, kind of tough sometimes to trade them when you've got the DXY just moving sideways like that. So at some point, we need to see some momentum. We need a catalyst fundamentally. Not sure exactly what that's going to be yet, but sooner or later we'll get it. And it'll move that dollar either to the downside or it'll continue to push long up to resistance. So we'll continue to watch that. And so tonight I want to start off, just click through some of the yen pairs that we were talking about last night as they made some good progress in a direction we were thinking. And I hope, right, was anybody, right? Were you able to take advantage of some of the yen moves to the downside? Drop me a 2 in the chat. If you were at least able to take advantage of at least one of the setups. Okay. Joy, Bennett, okay. 2, GJ, all right. Took 3, okay. All right. Good job. So yeah, they let loose, right? And now you can kind of see, you notice how these currencies, they cycle in, they cycle out. Okay? And the way we frame the market, you start to see it. You start to see the pattern. So if we come to the daily on this Aussie yen, you can kind of see that move right to the downside. So let's go down to the 4, right? I'm playing it short. You can see the move to the downside. So if you start to look at it, right, and you look at it, and we'll go through each one of these yen pairs, and then there's some others that I want to take a look at. You can see it, right? You can see the move, right? You see it? See that move there? So that's your Aussie yen. I was reworking this chart today, so I need to bring down some levels. So let me take this off of here real quick and take that down. All right. So if you see, we're coming into support, right? Key level here, but it's been a nice move to the downside. So far, so good. All right. So that's the Aussie yen. Now, if we go and we take a look at the CAD yen, we'll see if we go to the 4 and we say, hey, we've got this key level here that's going to come down to. It's just a matter of whether or not it wants to break it. But it's been a good run. Safi, good evening. So here, right, well, you see it. Okay. Same type move, same type pattern that it made on your CAD yen. Now we're at support. Okay. Now we're at support. So it's just a matter, hey, does it want to pull back and continue lower? Right? That's yet to be seen. This is a key level here, just like we just saw on the last pair. All right. So here, come in, right? We see that, right? You see a cleaner, right? On the 1. See that move there? Now we're sitting at support. Okay. But that's been a pretty good move. Off your high, extreme high, 225. Off your C there, 193. Off the pullback, just like that. Okay. Not even 24 hours, really. All right. So now we're settling in at support. So that was a good move. So we come and we take a look at the Swiss yen. Go to the 4, right? Not exactly the same pattern, but a push down, right? See how we got this push down and it's still, right, in progress. Okay. So we're still looking for, look, we broke that level that we were talking about. See, it's moving a little bit slower. Swiss yen's moving a little bit slower, but there you go, right? If we continue and we push down to this 138.99 and then so on and so forth. Okay. Being able to see the price patterns. It's really been trying to retest this 140.60, right, for most of the day. Okay, we'll see. There we go. There's the pullback, right? Drop a fib on your 4, just like that. See. Okay. So there's your price pattern there on the Swiss yen. This is why we mark up all of the pairs, so we can see the tendencies, see the patterns. Okay. Look at that push down, beautiful move, right? Beautiful move. We go to the 4. See it? We just saw that, right, on your Swiss yen. See, they move at different speeds. Okay. See? That's what we're looking for. Right? So the price action is still moving. Right? Now manage the trade. All of these moves, these are huge moves, right? Even off the break, right? 150 pips or so back down to the support. Big moves on the yen. All right, we'll take it. So when you have moves that move quickly over 100 pips, right, at some point you have to expect for bottom to form, price to pull back, right? Then the potential continuation down to your target. Okay. So you have to decide how you want to manage that. You want to get out, let it pull back, look for confirmation to get back in later, reduce the trade at these levels of support, however you want to play. We talked about that a lot last night. But that's your euro yen on the 4. So if we come and we just keep going, we go to the pound yen, right? Look at the move, big mover off your break, right? 218 pips off the high, 316 total off your C, 275. Just like that, right? Because you're patient, because you do your due diligence, because you mark up your charts, and you just wait. You just wait. So we go to the New Zealand yen. Look at that. Look at the price action. Okay. Off the break, that's off the 1. Come to the 4. Look at the move, right? We've got the move. Boom. What a way to close out the week. What a way to close it out. So here, down to that level of support. It's over 100 off the C, just to the level of support. We go to TP1, 120 off your highs to TP1, 196, right? Off the high, take it off the break. TP1, almost 140. Right? I didn't even add all that up, but it's quite a lot. Some nice moves, right? And then we go and we take a look at the dollar yen. And we were talking about how we had the possibility for price, right? We still want to see what happens for price to, it's either going to break this level, start making its way down, or, right, same type of scenario. That support is kind of similar and just about all your yen crosses. We say, hey, depends on what the dollar wants to do. It's in that range. If we get dollar strength, then it'll hold here, and we look for it to continue long, right? We look for it to continue long. And you can see here how on your 1 is kind of, see how it's starting to hold a little bit there. Okay. And your 1 hour is starting to hold at that support that we were talking about. So we'll see, right, what that dollar wants to do. That's what everything's going to depend on. It's what the dollar wants to do. All right. So we'll be patient with that one because that can go either way. We're not down. We're not back down to test this trend line yet. Okay. We haven't gotten there. So if it was going to go back long, be willing to be patient with that one and let it break, right? Let it break it. And let it retest. See if it wants to continue long from there, right? Because it can go right now, even though we're at a nice fit level, a nice support, right? We know that these yen pairs have been corrective. So let's just be patient, right? Get us some more confirmation, then we'll take the shot. All right. So that is all the yen pairs that we covered. It's a good move. Congratulations if you were able to take advantage of some of those moves that occurred overnight. They happened pretty fast, made nice moves, but that's what the yen crosses do. Right? That's what they do. So any questions on any of the yen pairs? No, we're good. All right. So like we said, you don't have to trade them all. Right? With those type of moves, you just catch one, right? And you're good. You're good. So, all right. That is it for those. Now, one of our members, and I cannot, right? If you're on here, let me know. But one of our members, she said, hey, it looks like those Swissy pairs are all going into key levels, right? So if you're on here and you said that, let me know. Let me know. Because I do remember that from last night. And I actually want to take a look at those setups to close out the week. Oh, okay. Okay. Thank you. Appreciate it. Appreciate it, Bennett. All right. Yep. I just couldn't remember. I couldn't remember who it was. Thank you. But yeah, so let's take a look at them. Right, let's take a look at these Swissy pairs. We know, hey, surprise interest rate hike, and then they got on the move. Right, it strengthened, and it's been on a nice little run. But we are, right? Can we look at the NZD USD too, please? Absolutely, we can. So we take a look at these Swissy plays, and we're coming down to some key levels, right? Here's a key support level. Here's an extension. Now we're overextended, okay, based on how far this pullback came. Okay, so we may, prior to it reaching the support level, we may start to see a correction. Don't know yet. Right? But when you go down to the 4 and you see where we're at, okay, in the zone, now you have maybe not yet, almost. So we get at the close of this candle, we'll have a 4-hour support here, like so. Don't quite have it yet. Right. So you can have a 4-hour support that forms prior to, right, these daily levels. Okay, we know we're bid extended. Okay, we got an 8-6 pullback into resistance. Your downside target for your correlating extension is an 8-6, but we're extended, impulsive move. So we may get that U-turn prior, maybe back to retest this 67, 66 level, then continue down. Okay, we don't know, can't tell the future on that, but it's a possibility. But you can see how you've got a low forming right here. Okay, classic 80-20 move off your 4 and on your 1 hour as well, I believe. So this is a classic move. So post it in the Telegram to keep an eye on. Now, if you don't, if this is not your thing, right, to buy back to the potential high price, then off of the trend line break or however you play it, and you're just overall, hey, I'm bearish on that Aussie, then you're just going to wait for your high price and you're going to get short. Okay. But for those who like to trade the 80-20 type scenarios, this is one right here. Okay. Price is starting to settle down a bit. Just continue to be patient. If you go to the 1, you've got the similar type setup here, starting to form. Okay. So maybe you go down to your 1 hour, draw your trend line. Go down to your 15, draw your trend line. All right. This is moving sideways a little bit. It's already starting to break it. See? All right. See how that's starting to settle? What I'm going to do is I'm going to adjust this a little bit to the outside. I would like to see, give me something convincing because we've got time. We've got quite a ways to go. I would like to see a nice explosive move, a nice bullish candle. These are kind of small. It's moving sideways a bit. Again, we're in the Asian session though. Okay, it's an Aussie pair, but we're in the Asian session. So I'm just going to be extra cautious with that, right? Extra cautious. Let it break. Give me something, right? Maybe even break this resistance level here on your 15, you see? Maybe break through and pull back. Right? Don't have to be super anxious. Now, you can be aggressive if you want, okay? Or you can just wait. Let's see what happens. Let's see if we can get it to push up and pull back a little bit, right? And get going. All right? However you want to play it, but that's an opportunity. Okay, however you want to play your entry, that's up to you. But we are in that zone. Okay. So that's your Aussie Swiss. Any questions on that? No. All right. So Mary waiting. Yep, me too. Me too. Let's take a look at the cash Swiss. Right. I don't think I had this one written down, but I want to take a look at it anyway. Because we're into I should have it written down because we discussed it. So double top, now we're down into the support. So my eyes have to light up. Think, higher time frame, we're selling into support. Let me check my little meter. You see how this is gone? If you're using like indicators like these or anything, right? How you can read these, you see how this was a strong sell. But you see how it's kind of moved into the neutral zone here on your daily time frame because it's starting to settle a bit, starting to consolidate at support a little bit. So now it's just a matter of I'm into support. If that holds, then I can go down to my lower time frame. I can utilize the fibs. Here we are zoomed in. Okay. I can utilize the fibs like that and play your targets. Or you can say, you know what? I just want to come down. I already know where I'm at. I know I'm at daily. I'm at a daily level. And I'm just going to leave it just like this. And on year one, you can see this clean. All right. So if you get a push up, okay, you could draw a trend line to the downside on that. But anybody in the group, you see this scenario here. You see these levels, right? We got 4-hour resistance, daily support or weekly support, right? 2 zones that price is trapped in between. Somebody tell me how would you play this? If you were gonna get long on this, how would you play it? Right? What would you wait to see?
And breakout.
Breakout. Right? Who was that?
Jeremy.
Jeremy. What's up, Jeremy?
I'm cool. How are you?
I'm pretty good, man. Thanks for asking.
Cheers.
Absolutely. Cheers. So, right, box this thing out. I want to break out. This is moving sideways. Okay. All right. And you say, hey, I'm thinking, hey, I'm at a key daily support, daily, weekly support. I see what's going on. It's been a long move down off the double top. I'm thinking upside on this. Okay. Then you just wait. Just wait. Be patient. Okay. Be patient. Let it come to you. Let it come to you. Break of 74,966. I agree. Break of structure and retest. Absolutely. You guys got it. Here, how to use the smart gauge. So it depends on, I don't know if they put it in all packages, but they automatically put it in here in the package that I have. I've been with them for years. And I think I'm pro, elite, whatever it is. I don't know. But they have this included on the side, right? So you've got a gauge, but guess what? We hold no secrets. This is the smart gauge here, but if you don't have it, you don't have to upgrade, right? We show you how to go to investing.com if you wanted to do something like that. If you even use it, you don't have to. And you just look at the technical summary. Okay. See what's going on. So we're looking at the CAD Swiss. All right. So I don't know if I have this one in this grouping, but let's look. Let's see if it's been selling through the higher time frames and maybe it's starting to buy on your lower time frame. So let me go in here and add this in and customize this. So I got 18 out of 18. Get rid of that UCAD and we'll put in the CAD CHF. Okay. And I'm going to apply it. Scroll down to the bottom. Still got it selling, right? So it's moving sideways. So we know, right? Neutral here, okay? And it's still selling. So it's still holding. So if you like to use those type of things for extra confirmation, you can. You see the visual, you see where we are. We're trapped, moving sideways, and we need a breakout. So that's a wait and see, but we put it on our radar, all right? Again, we're in those key levels, all right? Key levels. Let's see what happens. Any questions on the CAD Swiss? That's pretty clear cut there, especially off the higher time frame. Right now, that's pushing down. It's just a matter of whether it wants to sell. Okay, so this was a huge move, huge move. All right, 400 pips. Okay, so drop me a 4 in the chat. Are we starting to see the charts a little bit more clearly now? Right now that we know how to zoom out and work from the higher time frames. Okay. Okay. So we don't have to complicate something that's fairly primitive, right? Chart moves up, down, and sideways. That's it. That's it. We just have to be patient and not be anxious and wait for our setups. Okay. You guys can do this. I think somebody had a hand raised. Was that an accident or do we have a question? Antoine, I need patience. Man, it took me forever to get the patience. I feel you there. 4-hour chart has been awesome for me. Yep. I would agree. The 4 hour, especially for swinging, right? Okay, Treva. Especially for swinging. Like I said, when I was initially taught and trained, you really went no lower than the 4 hour, right? If you wanted a tighter entry once price hit a key level on the 4 hour, then you can creep down to your 1. But the 4 hour. So when we train though, and for people to get the reps, right, you'll see a lot of our videos where we're on that 1 hour chart because it's kind of like the sweet spot for really getting the repetition in regards to being able to see the Fibonacci sequence play out, right? 15-minute, a little fast, that could be some overkill, 5-minute, but that 1 hour when you're training and you're working on your fibs and you're learning the ABCD sequence and you're trying to see it and work through it, especially in your demo, that 1 hour is the sweet spot because it's just fast enough, but not too fast, but not slow like the 4. So it enables you to get the reps in. But the way I was taught to traditionally swing trade is that 4 hour, man. The 4 hour, monthly to weekly to daily, you're 4, right? Is where and most people as they evolve, right, through this process, that's where they typically tend to start settling in at, all right? Especially if you have a busy lifestyle. Yeah, so, oh yeah, okay. So that's where we are on the CAD Swiss. Hold on 1 second, everybody. Make sure everybody has control of their microphone. Joined us. Sorry about that. Kind of got right going. And okay, good there. All right, so we should be good. All right, so let's go take a look at this switch in. We already looked at that. We know where that's at. That level there, guys, is holding. It's holding pretty strong. Right? That's pretty awesome to see that. We'll see how it plays. Look at the 1. Look at that. Man, it's pretty tough. It's pretty tough. All right, so let's go to the Euro Swissy. And this is one, everybody, that we've been again bearish on for quite a long time because of the crown. We found a weekly crown months and months and months ago. All right, so you know we've been taking a look at this one. It's been moving to the downside, but that doesn't mean it's not going to have its pullbacks, right? And if you look at the weekly, it's coming back into, right, some key levels. So if we go and we just take a look here, see how it's just moving sideways. And we're back, see here. So this price right here is a decent level. So it's just a matter of whether or not it wants to hold, right? So we know, like, if you were just playing daily levels and you said, you know what, I only want to swing trade off the daily charts and play support and resistance, just structure, okay? If this is going to hold, we already know what's going to happen, right? We're all good at that now. It's going to form a swing low at that level. Here's your center, 2 to the left, you need 2 to the right. It's a waiting game. Okay. But if this is your thing, just to play daily, weekly levels of structure, you can make a lot of money doing that, right? You can make a lot of money. Requires patience, okay? But those are big moves. So if this holds here, we're in the Friday now, Asian session, Monday close. If this is holding around this level, then there's a high probability chance that it's going to continue to move up, right? So you could do the same thing on your higher time frames. Now, here we are, zoomed in. That's all we're doing. Same thing you just saw on the daily. We got a fib here though. Okay, got a fib there. So it's just, you can see clearly now, right? That the fibs, don't let it confuse you or complicate things. It's just measuring the waves. What it is what we teach is just raw price action. That's it. That's what we're teaching. Raw price action, which most traders, right? If you follow you get a lot of traders who they'll come onto the YouTube scene, right? And I give them a lot of credit because they stick in there, right? But they'll come in on the YouTube scene. And a lot of times this is how we learn. And they go from shorter time frames, a lot of indicators, quick get in, get out, which that is a style of trading. But as they evolve, right, if they hang in there long enough, you start to see less and less indicators, right? Things will start to disappear. So in the beginning, they'll make, for content, 50 million indicator videos, 15 different strategy videos, right? And it goes around in circles because they're still trying to figure it out too, right? But then as they evolve through the years, a lot of them end up trading with just pretty much a naked chart, right? Anybody ever seen that? Drop me a 3. I don't know if you guys follow and watch how I'm a trade junkie, so it might just be me, right? Okay. And then if you listen to high performing traders and you listen to their videos, and they do podcasts now, and people talk to these big time performers, and they'll say, I started out like this, but now I'm just looking at price action. Right? I just look at price action. Price action is going to tell you pretty much everything. And then when you throw the fundamentals on top of that to give you an edge, right? That extra edge is very, very powerful. So then you're just dressing it up with a fib for extra confirmation to measure where price can exhaust based on where it may pull back to. See? So this kind of gives you, okay, this level of support may hold. We're in a zone. We've got a shallow pullback, less than the 382 at a key level weekly support. This might push up, right? This might push up. Now you could target, right? As a trader, you could target, we always put it in, right? Because that's just a good fundamental structure, universal structure to teach everybody, right? You can set these targets up here, your 382, your 61.8, but you might say, oh no, I've got it. I'm good. I just want to look at the price action, and I'll play. I want to shoot for a target back to structure. Right? That's all in the same zone. Okay? You just have to think your way through it. So the whole idea of this group is to give you just a solid foundation, right, on how you can just methodically, right, move through the charts consistently, no matter what the pair, right? No matter what the pair. So you're not, oh, I'm gonna use this indicator for this pair, or I'm only gonna trade this time frame on this pair, and this and that, and all, and now you're all over the place, right? You can just methodically move through each pair, right? Different asset classes, taking the same approach, because you'll start to see, right? It's literally the same thing over and over and over again. But it's hard to see that. It's hard to see those moves that we pointed out with the yen crosses if you don't have a consistent approach to the market. Okay, so that's the whole point, right? If there's nothing else that you take from that, is that when you're in this group, in order for you to make consistent profits, you have to have a consistent approach and system and methodology, right, to how you do things. And that's with anything. That's with anything. It could be making your bed in the morning, right? So, but yeah. So here we are. We're at this key level. Okay. So you say, all right, I see this. Even on this 4 hour, I've got some levels built in there, right? So we come in and we put in, see that? Okay. We got some levels built in there. So if you wanted to put those levels in or not, right? For some, it just, hey, the chart's too busy, right? I don't want to put in 4-hour levels. That's fine. That's fine. It's a matter of preference. Okay. You don't want to, you don't have to. Okay. Like that. So I'm on 4. Take that down. So now you can look at it here, or you can say, like I was saying earlier, right? Trained off the 4, but you can say, you know what? I'm gonna drop down to this 1. See? And if I start getting breaks, and if you're aggressive, it's just only a couple ways, everybody. If I'm aggressive, I get a bullish candle close on the backside, boom, I'm in. You can say, I put my stop below previous low prior to the trend line break. Below the low prior to the trend line break. And if I get that break and you're aggressive, boom, it closed bullish, I'm in. And you can just measure that out. Right? We've covered this before. So if it breaks, boom, measure this out. That's 65 pips. If that's where you want to put it, fine, right? We divide our risk by our stop loss. Okay. Boom, 65 pips. Okay, maybe I'll go for 2-to-1 on that. If you want it tighter, make it tighter. Go for 2-to-1, 3-to-1. Maybe you make it, okay, this is 65. Maybe I want to only make it 30 pips. Maybe I want to put it just below, right, this level since price broke it but didn't close below it. However you want to do it is up to you. Okay, our job is to get you to that point where price could reverse consistently. Then you work your magic. All right, so if you want to run a tighter stop in that, you can. If not, then whatever your risk is, 1% divided by 65. That's going to tell you what your lot, what you should be trading at, your lot size. Okay. Now, so if I got $100, if I'm risking $100, that's 1%. $100 divided by 65 pips. I could trade that at $1.53.15, pretty much 1.5 minis, and then I'm gonna let that go. Right? Try to get me a 2-to-1 on that, right? 65 times 2 is 130 times $1.50, right? Almost $200 or whatever. So that's how it goes. Same thing, right? Get in the routine. But that's the Euro Swissy. Trend lines drawn, and then we just wait and see. We just wait and see. If you're a pullback trader, again, you did a lot of work to get to this point. Hey, I want to wait for price to pull back. That's fine too. That's fine too. Because then you can slap a fib on there, it pulls back to your level, then you can set your projection. However you want to do it. Okay. Do the same thing on the 15. 5, you're a day trader, however you want to trade. Okay. Or you say I'm bearish and you wait for a high price and you get back short when the time comes. Any questions on the Euro Swissy?
Yes.
All righty.
I was wondering if you can go over that last part again when you're placing your fibs, but go a little.
Yeah.
Because that's where I'm stuck now. I've got my support and resistance. I've got my trend lines. It's just placing the fib. Now that they're calibrated correctly, I'm trying to figure out like where to put it, like how to determine my entry, my exit, or what the probability is, and all of that stuff.
Gotcha. So you run a fib, okay? You've already got a low, right? Okay, see my swing low here?
Yes, sorry, I muted myself.
That's okay. Yep. So here's my swing low, okay? What I need is, and preferably what you want, is you want price to push up and break this trend line. So what it's gonna do is you want price to push and break this trend line. And you see how you've got this swing low here, this 5 candle combination? You want price to eventually form a high on the other side of this trend line. Because once you get that, then you can pull your fib, right? I'll just use a manual one here, right? You pull your fib like that. See? But you remember, right? You won't have a B boundary until you get a swing high to form. You get what I'm saying?
Yeah.
Okay. So it's just, this is where the patience comes into play if you want to play pullbacks, right? So you wait, you wait for that high to form, then you draw your fib. So wherever that high is going to form, you draw your fib. And then when it pulls back to you, like so, okay, then you look to take that trade. And then it becomes the same scenario, like literally over and over and over again. If I'm looking to take this trade and it gives me what I want, okay, if your rules call for this, then wait, the market has to give you what you are looking for. Otherwise, you don't take the trade. That's how you stay out of trouble in the long run. Okay. If you don't get it, if this is how you like to trade and you don't get it, don't trade it. Number one rule, preserve capital. Okay. Now, so you get price to pull back to the levels that you like. Now it's just a matter of, how am I entering that trade? Am I going to reduce my risk and say, oh, I want to put a buy limit at these levels, and when price comes down here, it'll automatically kick me into the trade? Well, if you do that, you're going to trade smaller, because I'm not going to be around my computer. I got the high to form, I got the fib on it. If price pulls back to my 61.8 level, it's automatically going to take me in a trade. Okay. If I'm trading like that, I significantly reduce my risk. Okay. So maybe 1/4%, maybe even 0.5%, but most of the times it's 1/4% that I'm going to put there, because I'm not there. The trade can, it could continue down. I'm just going to put it small. That's just how I like to trade limits, because typically I'm putting into a buy limit there at the 61.8, a buy limit at the 786. And I'm looking for price to swing. I'm gonna put my stop below the A if I'm limiting in, and I'm gonna wait for price to take me in at these levels. If it hits the 61.8 in reverse, it's fine. If it doesn't, maybe it catches the 786 and reverse is fine. If not, I'm protected with my A. I know I'm in 1/4%. If it takes me out, then I'm out 0.5%. No harm, no foul. It's all good. I figured that out before I even took the trade. Okay. Now, if you want to manually enter the trade, then you still want to wait for price to come to whatever level it is that you set for yourself. And then you can say, you know what I want? I want to swing low to form at this level. That's what I would prefer, right? I would like to see it hold and form a support. Well, what's going to happen there? It's going to give you another 5 candle combination for a low, right? That's what it does. If you're looking for that, hey, I need a swing low at my level. Okay. Wait for that to happen. Then you say, I would prefer to have a trend line break. Okay. And once that swing low forms, so you have your 2 candles to the left, your center wick low, and then boom, it'll break. And you get something like this form, right? Like that. Boom. You say, you know what? I'm in. Now, you're in. So what you have to decide is, how do I want to play? All my confirmations have been met. I'm in this trade. Bang. So what you have to do is, do I want to let the trade just float and put my stop below the A, or do I want to put it 10 pips or so below my C, right? Especially if you wait for a swing low to form in that zone. Do I want to put it below my C? Because that's, in other words, that's saying I'm going to put my stop right below support, right? Like that. So either below the A or below support, okay? If we put our stop in the A boundary, now we have a higher percentage chance of getting stopped out, but that's okay if you're fine with that, okay? You run a tighter stop, because guess what? If you run a tighter stop and you get a runner to your D extension, that's a huge move. Your reward to risk is crazy, right? Now, if you take it at this level and you put it below the A, it cuts down on your reward to risk a little bit, but you give your trade more room to breathe, okay? So you'll have a higher strike rate, right? Winning percentage, but you won't have as high of a reward to risk ratio. Okay, so those are just the decisions that you have to make at your point of entry. But that's what you want to do, right? If you play trend line breaks and you like pullbacks, I wanted to break and pull back. Then you just wait for your high to form on the other side, pull your fib, and then let price correct, and then you look to get in.
So
All right.
when do you know to get out? Because I know you were saying a couple days ago that you want to look for like basically the opposite of your fibs.
Yeah.
Correct?
Yeah. So that's just your correlations, right? Knowing your fib correlation. So I know it's a momentum thing, right? The energy trampolines is what we call them. So they even have them color coded, right? To let you know. So anytime we have a correction or a pullback to any of these red levels, the key is not the color, it's the percentage, right? It's the math behind the Fibonacci sequence. So I get a 23%, 38%, 50, 61.8. Any of those levels get hit, we know we have a caveat with the 236 where it can stall. But if it hits any one of these levels, we know that it has the potential for momentum to carry price to your 1.618. Okay, the extension. Red to red. Okay, with the exception of sometime of that 236, because we know we got that 80-20 play where price can push back down. Okay, but this is how this works out. Okay, so I've got enough momentum to carry to a 1.618 D extension. Now, you can hold it all the way to the D extension, or like we talked about last night, you can mark different levels. Maybe you don't want to go all the way to the D extension, everybody. Maybe that's not your thing. You haven't developed the tolerance to hold the trade that long. Well, we know that a strong resistance level is the B boundary. Okay. A, B. This would be my C. And then you're correlating the extension is based off of where price, how far price pushes down within the AB boundary. Okay. So I've got my C. Oh, it came in at 61.8. So my long-term projection for this is a 1.618 D extension. And you may say, you know what, man, I don't want to hold it that long. Well, the B boundary is a level of resistance. So maybe you want to take the trade up to resistance. That's fine. The 127 is always, right, a strong level where you get profit taking. So maybe I want to put a target there. Maybe I want to set my trade up for all three targets, right, where I reduce the trade at each level. Or like I said, maybe I just take it, right? So if I put my stop below, if I have my stop below this C, right, and the trade took off, if I take it, if my stop's below the C, what is that? Call it 20 pips, right? 37, not quite a 2-to-1, right? But then as you move up, look, 60, 93. Okay, so the fibs can set you up sweet. It provides a real good framework, right, for entering, where to put your protective stop, okay, and where to get out. So that's all gonna come down to you. So you can choose to get out at certain levels, whether it be fib levels. Maybe it's a strong level where you've got this B boundary, right? It represents also a strong level. Maybe it's a weekly resistance, like here's a 4-hour resistance. Maybe you get out there. Maybe you take 50% of your trade off the table and let the rest run and move your stop up to break even, like this, right? Boom. This is where I enter at 101.20. I move my stop there. So if the trade comes back on me, right, took some money off the table, whatever's remaining, if it comes back on me, I can't lose money. My stop loss at break even. I'll break even on a portion that's still in the market. Okay. So that's how you know, right, where to get in, where to get out. That's how you set your targets up. Okay. But you always want to make sure that you put yourself in a good reward to risk ratio. Right. I'm definitely a firm believer in that, for sure. Making sure that you put yourself in the proper ratio, because that lets you know that, okay, I don't have to be correct on every single trade. You know, my goal is to be accurate, but I don't have to win every trade to make money. Okay, that's what a reward to
Risk to
risk
reward.
ratio. Yeah, reward to risk to reward. That's what it does for you.
So
Okay.
question.
Yeah.
So even if I did put my let's say this, I'm going with this trade, and I put my stop right underneath the C boundary, right?
Yeah.
Isn't the amount of pips, like if it does take off, the amount of pips from that entry, and regardless if I put my stop loss below the A, isn't the movement of pips upwards, isn't it the same? So why does that change like the risk ratio? Does that make sense?
Yeah, because right. So if you enter, right, say your stop, right, is below the level that you entered, wherever you enter, right? So let's call it here. I entered at the 61.8. Okay, clean this up a little bit. Say I entered here, and my stop is below here. Okay, like that. If I entered at 101.03 and I put it there, what am I risking? 5 pips. Okay, let's call it 10. I'm gonna call this 10 pips. So here I'm risking 10 pips. 10 pips. So minus 10 pips. Okay. If that trade runs off that 61.8 and goes to that D extension, clean this mess up. So my projected TP is the 1.618. So I just risked 10 pips there. Okay. Call it 110. All right. That's a different reward to risk ratio than if I put my stop below the A, gave the trade more room to breathe. My entry is the same entry. If I move that stop, I'm now risking 38 pips, call it 40 pips, to gain 110 pips. That's different, right?
Yeah.
Right? Because for one, I'm not going to be trading at the same lot size, because that 1% divided by 10 pips, right, I'm trading at a higher lot size than I would if I divide that by 40.
Okay, that answered my question.
You got it?
Yeah.
Yeah, because you're gonna divide your risk by your stop loss.
Yeah, because I feel like I would be a safer trader and put it, at the A boundary. But I couldn't understand, like, I guess why it would be better, quote unquote, to put it underneath the C. But you just explained it. The further my stop loss is, the smaller my lot size. Yes.
Correct. Correct. And so the thought process is like, okay, and it depends on your psychology as a trader, right? Some of your bet, I'm telling you, you can go and look at the what is it, like the trading world championships and things like that. Some of these traders, they have win percentages of like 35%. I seen one guy with like 30%, but they keep very tight stop losses. But man, when they get one to run, it runs, right? But you have to be able to stomach that. So you may say, man, my stop loss, I mean, my win percentage is 40%, right? So I'm winning 4 out of every 10 trades. So psychologically, you have to be able to deal with, my first 6 trades might be losers, but I know those 4 winners are going to come, because historically I'm a 40% trader. So you have to think to yourself, can I handle losing 6 trades in a row? Okay, it's a different thought process. Okay, can I do that? Can I stomach that? Because I know a lot of people, especially when they get into trading, the number one problem they have is They can't stand to lose. Right? Because you cannot control the sequence in which the wins and losses occur. You just can't. You never will be able to, right? Flip a quarter 100 times, see what happens, okay? So you have to be able to execute that, okay? If not, then you give your trade some more room and you trade smaller, right? You trade smaller because if this is gonna run for 100 pips, it's not gonna run for 100 pips like this. It's gonna move in waves. Trades always make an impulse move up, they correct. Okay? So you could trade smaller, and as price moves in your direction, when you get those pullbacks, you can add to the position. You can add to the position. So if I'm trading at 25 cents, my initial order, as it progresses and it pulls back, I'm confident in where this is going. I can add to the position. See? Because ultimately it's moving in my direction and this is my target. Okay? So that's how you have to think about it. And that's why we say, man, you know, if you want to do this thing, you have to dive in, right? You've got to spend the time, because that's the only way. Nobody can tell you. The only way you can learn, you know, what you like and how you feel when you execute these things, only you can discover that, right? Can't discover it just taking signals. Can't do that. Can't. So great questions. Did that help you a little bit?
Yes, that helped a lot, actually.
Awesome. So yeah, there's a lot. Now, when you talk about like just outright like compounding accounts, this is how most people do it. They have a very low winning percentage, but they have a high reward to risk. Okay. You have to have a lifestyle for that. You have to be able to be on the scene for those type of setups, right? Or have some type of alert system, whether you put alarms on horizontals, right? Put your alarm on to send you a message when price comes to a certain zone. You have to put your system together to be, if you have a busy lifestyle, to be able to execute this. But this is how people compound accounts really fast. It's not risking a standard lot on $1,000 account. No, they're gonna risk the same 1%, but they're gonna run it. They're gonna run the stop a lot tighter, and their winner percentage is gonna go down, but their reward to risk becomes a lot higher. Right? It becomes a lot higher. So that's when you start getting those 5-to-1, 6-to-1s, those runners. And then your super pro traders, what they're really good at is when they get one of those runners, then they really start to stack in on that position as it goes in their direction. That's what they're really good at. Is, okay, this is going my way, I'm in it. Boom. You know, they let loose. And that's how they make up ground for all of those losses. That's how they do it. So hope you guys get that, right? Drop me a 1. It depends on what your goals are. That's a great question, Dominic. It depends on what your goals are. Like, if you're trying to compound an account, right, a lot sooner than later, that's the way you do it. But you do not do it by going in and risking 20% of your account on one setup. You don't. A lot of people think that's how you do it because they don't know, right, exactly how it's done. So it just depends. If you're for compounding, that's what you want to do. You like that style. You have that type of energy. Then you do it that way. If you're a busy person, then, you know, you run, you go with a more slower growth, you trade smaller, and you let that trade swing and give us some room to breathe. But here's what I want you all to know, though, that if you develop the tolerance, right, to stay in the trades until they hit those extensions, okay? So, like, um, those longer term swings, right? Think about this. The fib sequence can give you the best of both worlds either way, right? If you're putting your stop above the A, okay, think about this now. If I put my stop above the A and I pull this trade off, okay, and we get an ABCD move, you're trading smaller, but look, my stop's above the A. That's 165 pips. My D extension is 427 pips away. Okay. That's 2.5 to 1, right? Something like that, almost 2.6. So if I'm looking for, if I'm being patient, that's why we're big. That's why we're big, right? For our new folks who don't know, that's why we're big on, not because it's some mysterious ratio, like, oh, it's magic or sorcery or whatever, the 61.8. It's the golden ratio. The reason why we want trades to pull back high into zones, in this case, to get short, is because it's putting me close to, if I wait, it's because of how the math works. So if I wait for this to pull to a 61.8 and I put my stop above the A, okay, right, and I put my stop above the A, call it 200 pips, that's 600 pips. So if I wait for deep corrections and put my stop above the A, I'm kind of getting the best of both worlds. Why? Because I can trade small, because I can add to the position later as it goes in my direction. You had, on this last ABCD wave, you have plenty of room to add to this position, okay? So I can trade small. Now, it's not going to be a crazy 10 to 1, reward to risk, but think about it. This move right here, if this occurs, 61.8 goes to my 1.618 stop above the A. We just said that stop is 200 pips away. My 1.618 D extension is 600 pips away. That just put me in the 3 to 1. So we always say, hey, the fibs can help you determine direction, where to get in, where to get out. It provides pretty much a universal framework on how to set up a trade, because now I'm in a 3 to 1. No, it's not a 10 to 1, 12, something crazy. But guess what? At a 3 to 1, if I can do that consistently, I only have to win 3 out of 10 trades. I only have to bat 300 to take money home. I can lose 70% of my trades, and at a 3 to 1 reward to risk ratio, I'm going to take money home. Only Major League Baseball players can do that. Everybody follow me on that?
Yes.
Awesome. So I'm still, right? I'm still with the Fibonacci framework. I'm giving myself the best of both worlds. So you could come in and run it tight, right? For faster compounding. Yeah, price will move up on you. It'll take you out. You say, oh, it formed a high at the 61.8, and boom, it'll keep moving up and pushing up in the zone, and you get stopped out, right? So you can play that game. or you can trade small at the levels, and when it goes in your direction, add to the trade. So either way, because of the way the math and the Fibonacci sequence works, you can come out on top with both, right? Decent profits, compounding your account. It'll be slower, right? But you still compound nonetheless, and you still put yourself in the proper reward to risk ratio automatically. So that's why we wait, and we always say, well, my trade plan, I like 61.8, 786 or higher. That's why the smart trader puts the zone, the sell zone on this fib here and not down at the 382. All right, because the optimal position to take this trade is high in the zone, and look for price to reverse, because you can put your stop out the way if you want to, because as long as it doesn't take out the A, right? You guys know the saying, it has no choice but to go your way, meaning it can dip, dive, move sideways, do the electric slide, whatever, Cupid shuffle, all within this AB boundary. But as long as it doesn't take out the A, it has no choice but to go my way. Okay. How fast it does it, right? We don't know exactly when it's going to do it, right? The speed can be determined by the ATR, right? The average true range on a particular pair. We don't know. But we're in the game in this AV boundary. That's why it's so powerful. That's why it's so powerful. Okay. So great questions on that. But since we're on this, okay, this is your New Zealand Swissy sitting in a brand new AB boundary. Right. So if we come up out of here, look at that. Look, this is a prime example. Even on your day, you see it running? Look at that. See? This has it all. 80-20 swing, 61.8 zone, up against structure. Really nice. And look at that. People say, oh, no, that's ridiculous. Not going to happen. We got a 61.8 pullback, and this price is about to close in 600 even, the D extension. That's pretty much there. Right? That's where we are. It's just a matter of whether it wants to correct and retest some levels that it smashed through before heading down. See? And we always say, right, you don't believe it, just scroll back. It's what the market does. It's what the market does. Look, A, B, C. Last major level was an 8.6. D extension, 1.18. The higher it pushes in the zone, the less momentum it has. The less momentum it has to the downside. So you project 1.18 extension. Boom, it came in right at support. Soon as the low formed, A, B, C, D. That's the target. Okay, so let's come down of that zone, almost 500 pips. That's this year, not 2 years. That's this year since March. It's been moving down. Okay, so that's the swing. But we have had a strong impulsive move. It has broken through a lot of key levels. So now you're looking at a scenario where you come down to your 4 and your lower time frames where it's like, we may see a correction right before it continues to move down. Okay, so we've got that marked up. We've got that marked up. So now it's just a matter of where does it want to reverse? Does it want to reverse off this B boundary? This is a 4-hour support here. Here are these higher time frame levels that it just broke through. Is it going to push up and retest them and get back to that 382? Or will it reject? Will it reject? Okay. And push down. We don't know. All we can do is put ourselves in an area of high probability for the U-turns and make the play. If you like playing it off that B boundary, then if you get the break, then you take it. If you say, that's a lot of trouble there, I don't want to play it, then you pass. You pass. And then maybe if it moves and makes its way up, you say, I want to see it get through trouble first. And if it retests, then I'll just take it the rest of the way. Or you say, I don't want to play it, period. And I'll wait for a high price to see if I can get short again. Or you may say, I think I'll wait. I like playing those 127s, those clean 80-20s where I get that shallow pullback, less than a 382. Boom. Oh, it's got trouble there. So maybe it pulls back, and then if it pushes down around that 118, 127 zone, then and only then will I look to play a trend line break back to the upside on the counter, right? See, everybody doesn't like to play counter trend reversals off the B boundary. Some people like getting here. Why? Because now my margin widens, right? So here, but off the B boundary, 182, off the 127, back to the 382, 320. And I'm settling in at key levels of support. And I know that if price wants to continue to just smash, if it smashes through my 127, then most likely is running back to the D extension anyway. So some folks just say, hey, I just want price to just kind of, if you think of an alligator, right? In the mouth, I want it to just widen a little bit. And then I'll look to play that back to the 382. Right? B boundary, 118, 127 zone back for the counter. Okay. And then what you could do here is once I get that to hit, I'll draw my trend lines on the lower time frames or wherever I want to take it. Let the low form. If it holds and it breaks trend line, then I'll look to get long. Okay. You just have to think your way through it, right? Through the process. Okay. Took it off this high right here. This last high and ran it down. Right there. All right. So no matter what the pair, right? Same thought process, same approach. Repetition is the mother of all skill. That's what it's about. If I don't trade counter and I'm only with the trend, then you know what? I'm gonna click right past this until I get a high price. I'm gonna move on to the next setup. When I'll write it down, but when it hits my zone, then I'll look to get short. And if it never gets there, then it never gets there. That's just a trade I don't take. That's it. You're welcome. You're welcome. All right. So somebody wanted to take a quick look at the NZD USD. And this thing is just continuing short. All right. It's kind of stalling. But things can get hectic when you get that dollar bouncing around like it's doing. Right. So till that dollar makes a move, either above or below that support, it could just continue to move and shake. But this is another move, right? I'm running, it's been such a long move. I'm running sub fips off of it. But look, can't make it up. Different pair. A, B, C. See why they have that as your optimal zone right there? Boom. It's ridiculous. All right. It could be life changing if you get it down. But we're stalling right now. I'm still bullish on the dollar. I'm still bullish on the dollar, so I expect that eventually to finish out. This is just moving around, so it's really nothing. See, if you go into the one, it's just trying to make his mind up. But even on your 1 hour, your smaller wave, look. Right, so that's just ranging right now, consolidated. There's not too much I can give you on that. I'm still overall short. And so it may dance around for a little while, especially with the dollar doing what it's doing. I'm still expecting that to continue to the downside on the NZD USD. All right. GA. We're moving into some highs here, right? And this is just choppy. Right? But we are moving. Look at that. See that? So we may get a reaction off of that, right? So the best thing you can do, okay, on the 4, we're in this range. You can actually get this a little tighter. Right? So if I'm coming into this level, I know that's a daily level. I got a reaction last time. When it's all choppy like this and moving from left to right across the center of your screen, just draw your trend line. Just draw your trend line. Just straight price action, support and resistance. Just draw your trend line. That's all you got to do. Okay. If you want to do that, you can draw your trend line, or you can say, you know what, Benny, I don't even want to use that. These lines, these horizontal lines are so clean in the range. If I get a break below 176.77, I'm shorting. Okay, I'm shorting. I won't play a breakout above 178.04 because I got a weekly level. It would have to break above and retest this 178.93. Okay, so you can look at that. Okay, trend line break for extra confirmation, but see how this is trapped in this zone there? If I get below, just on past history, if I get below this level, like that, especially if it breaks back to me, right? Kind of like how we saw in that switch in, I think it was. And that level holds, then you can put your stop above the high, or you can come here, especially if it forms a swing high here. It's the same thing. You guys see it now. I know you see it, right? There's a high, but if it holds here and forms another swing high, then it's the same scenario. Do I put my stop above my high, which is my A, or do I put my stop above my C and play it to the downside? Right? So that's how I would play that, right? This is you're welcome, Beverly. Thanks for being here as always. Thank you for participating. So that's where we are on that. That's how I would play that. Okay. It's not super clean, but you got some levels. You got some levels. You're welcome. Okay. So that's it. I think we had did we cover? Oh, the pound swissy. Okay. Here, look at where we are. Okay. Key levels. All right. Even if you when you see price coming, even if this is going to be just a correction where we get a bounce off this level and then a continuation down, there's money to be made off that bounce. Right? Or you can say, I'm gonna wait on the high price and get short. Same stuff, everybody, over and over. You guys will see this stuff in your sleep. Promise you. Okay. Now, there's money to be made. So that's why we like looking at these higher time frame levels. Because even if you go down to the 1 hour or the 15-minute, right? So let's go down to the 1 hour. And even if price comes up and you say, okay, I'm not even going to set an aggressive trend line, but the same scenario, right, that we just went over. If I get price to move up and press and break, yeah, now we know it can have a lot of upside potential, but even you can make your whole career off of this break, enter aggressively, and trade inner to outer trend lines. Right? I'm gonna look to go from the inner to the outer trend. Trend lines are like a magnet. If one breaks, and if it goes, it tends to gravitate towards the next trend line. Okay, so you can make a career trading inner to outer trend line breaks off of key levels of support being hit. So you might say, man, this trade might go 1,000 pips to the upside, but I don't care. I'm gonna take me one ABCD wave, boom, and I'm out. I'm done. See you later. Going on about my business, waiting for the next setup. You can make money trading in and out of trend lines, pullbacks, right? Trend line breaks, pullbacks, trade to the outer trend line, right? Trade to the next level, trade to the D extension. So you just had to be patient and wait. So we're coming into, you see how these cycle. right? We saw the yens do what they did. We saw the dollar make a run. Now, this is just dressing up the price action. This fib is nothing more than extra confirmation on top of what we see. Look. We saw this coming in the key support before we ever put a fib on it. Look, A, B, C, D. First low after the D extension is hit is your B. Your old C is your A, B, C. So same scenario. Do I want to play that B boundary play? If I get a trend line break, do I want to go down to the 15? Look, it's already look. And this is a pound switch, so you know that's giving you something. That's 60 pips. Just do your work, set yourself up for success. Set yourself up for success. All right. I don't know if that's going to give it to me off of this mic. Yeah, it did. There we go. All right. So am I in aggressively? Now it broke. I want it, I'm taking it. Or do I say, you know what? I'm going to let this thing go and pull back on me. See? And maybe you say, you know, because I got time. Even if that pushes to the D extension, that's cool. Okay, guess what's going to happen? If that pushes to the D extension from here, this is my C. Wherever that D extension gets hit and forms a high is going to be my new B. And now I'm in the buy zone anyway. Right? I'm on the other side of this trend line. Right? If it gives me what I want, I'm getting in and I'm taking a trade. Okay. See? That's how it goes. Here's a high. Price action structure, right? Here's a high. Look. Bam. Oh, I need this level to get broken first. See it push through this level and break. Right in line with that D extension. I get a break, get a fib, pull back, I'm in. Right? Even if you don't use a fib, I needed to break, give me a retest. Right? If I get a break and a retest of this zone, okay, just think your way through it. I'm patient. I'm gonna let it push up. Okay. If I never ever use the fib, it's gonna let this price push up, break a level, come back and hold. If it holds that level, okay, I'm in the ball game. Got it? That's the game. That's the game. Any questions about anything that we covered this evening? Jeremy, how can we trade the Russian ruble? I forget this. It depends on you. If your broker has it, you can trade it. Right? If they have it on, if they have it on the spot, I don't know if I know brokers have the ruble. You can trade it, trade the ruble. But like I said, it depends on the broker, and then I don't know if they've done anything with sanctions and all the stuff to where they're barring anybody from trading it. But I thought you could though. I thought you could. Yeah. I know there's a lot of yeah, you're welcome. There's a lot of people that trade. I don't trade it. There's a lot of people that trade the dollar Mexican too. I don't trade it, but it's a pair that a lot of people trade, dollar Mex. Yeah, but that's a good question on the ruble. But yeah, as long as it's on a platform, you should be able to trade it. Yep. All right. Try to say you're welcome. I appreciate it. Thank you all for being here and participating. Mr. Carthage, how are you, sir?
I'm doing well, man. How about yourself?
Doing great. Doing great. Awesome session. This is a great group.
Benny,
Yes.
can you look at you were explaining earlier with how to do what is the word? Average in, or how you pick up another.
Oh, like put in another order?
Yeah.
Yeah. So what is it? You're trying to short it? What are you doing?
Yeah.
What are you doing?
So
I
shorted it from the top.
the top?
Mm-hmm. Like I
Yeah.
had an entry before, like the B to push down, and then it pushed up.
Okay.
So
yeah. So you can, like, you're in a position, if you say, hey, my bias is to the downside, right? You could go in into your MT4 and say, whether it could be, 30 cents, whatever you want to trade. You could say,
yeah.
you know what? I expected this trade at the big move to pull back, right? I expected it to pull back. So what you do is you go into your phone and say you wanted to add this order at the 61.8 out the pullback. Hey, it formed a low. If it pulls back, then all you have to do is go into your phone and add just a market execution. Just add to the position. Like, just, it's going to be a new order though.
Mm-hmm. But in terms of the fib level, like when it pulled down and then it pulled back right where it is, right there.
Right here. How do you get in on that?
Yeah. Like I wasn't really, like I said, let me just, I took my partial.
Mm-hmm.
And then when it pulled back up, I closed it out. So if I wanted to get in another entry, I guess confirming that it's gonna keep pushing down,
Yeah. Well, all you could do is play your levels, right? Your probability, right? Mm-hmm. So because you want to put yourself in a position, so you still use your same rules, right? So if your level is the 61.8, you will want to put your order in there, right? Because you're just running a sub fit. Because you still want to, if you're adding an order, you still want to put yourself in that proper reward to risk ratio.
Okay.
So that's why, like, if you wrote it down, you don't want to just start adding at any level, because right now, right, you're caught. You see what I mean? So if I were to just say, oh, this looks great, it's going down, right? It's going down, rock bottom, and you enter here, now you're caught in a pullback. So what you do is, what I like to do is I like to use my sub fibs on a major move to still use my key levels, my 61.8, my 786 on my sub fibs to add to my position, right? So if I have, so it's still within the same, it's the same philosophy. So if I have an AB boundary, right, and I get a pullback like this, and say I've got an entry at the 61.8, okay, like that, bang, and then price takes off. So I'm in profit, right?
Mm-hmm.
What I'm gonna do is I'm not just gonna randomly just enter another trade because, hey, it's going my way. I'm still gonna use my same rules. I'm gonna wait now. Price is moving up, I'm in profit. I'm gonna wait now for price to form a high, and the next time it pulls back, right, I'm gonna put a fib on it like this.
Okay.
You see? And when it comes back to me, if that's my spot, then I'm gonna add another position. See? And then as it goes, boom, now I got two positions up. You see what I mean? So depending on how many waves you get, how large that range is between the 61.8, as long as say I'm targeting a daily extension, right? So I look at my daily chart and I say, wow, this is bullish. My daily 1.618, the extension is way up here, okay? So what I'm gonna do is I'm gonna enter that position, and then say on my 4 hour, my one, every time that trade gets going and it pulls back, right, I'm going to look to add a position. Okay. Fundamentally, technically, hey, I'm bullish the dollar. I'm bullish the euro. I'm bullish the euro. So I'm just going to keep stacking. Once I get going, my stop, whether it was originally below the C or below the A, I'm just going to keep moving it up. right? So if I had it below the A, now I'm here pretty much at break even. And now I've got a new fib running, boom. And when this pulls back and I get in, I'm gonna move it up. So now I'm starting to lock profit in, see? And then eventually, right, if I do become wrong and it turns on me, then I'm gonna get stopped out, but I've made money. See what I mean? Like that. And you can really do that, especially off those 4-hour targets that are huge. You'll be able to add 2-3 orders in on top of that, right? And you just accumulate, and this is not, you're building a position, right? You hear a lot of traders say that. I'm just building a position, right? As it goes along, because hey, I've got a long-term projection of 400 pips. I'm gonna go down to my 1 hour or whatever, and just trade the smaller waves in that direction. I got 400 pips of bullish potential. I'm gonna go down to my lower time frames, and I'm gonna trade. When I get a pullback on the field, I'm gonna add to the position. Yep. So that's how you do it.
All right, thank you. That was good.
All right. You're welcome. You're welcome. Ryan. Hey, what's up, man?
What's going on, everybody? How we doing?
Awesome.
Good. Hold on one second.
Okay.
My bad. Great session, bro. Great
Thank
session. Everybody, we greatly appreciate you guys showing up. We greatly appreciate you guys being here. We've been notified that there are some individuals that are in the Telegram group that should not be. We're unsure how they got there. So a couple things. First, we ask that you do not share any links to the Telegram group, right? Do not share links to anybody, so that we can continue to monitor who's in the Telegram group and who is actually supposed to be in the Telegram group. Second thing is, if you receive any messages from anybody outside of us trying to get you to go to any other groups from individuals that say they're in the inner circle, please let us know about it, right? We've been notified that there are a couple of individuals that are reaching out kind of spammy to members in the inner circle. That's not authorized by us, right? So we want to ensure that we keep all of that out of our group. So if you receive any messages, somebody trying to get you to a signals group and this kind of stuff, they're saying that in the inner circle, that is not authorized by us. That's not coming from us. And please let us know about it. Send us a screenshot of who the individual is so that we can ensure that they get removed from the chat, right? And again, please do not share any links that have been sent to you so that you can have access to the Telegram group. Those are not open links. They should not be shared to the public, okay? So those two things, please keep top of mind and let us know if you guys see anything that looks fishy. Please send them our way.
Absolutely. Thanks for bringing that up, right? And thanks to the members who made us aware of that. Look, it's bad, guys. We'd never, and I'm a pretty private person, so it's really annoying. So we've had profiles hacked, profiles duplicated and stolen on Instagram. I'm not even active on Instagram or Twitter and stuff like that. So we're never going to reach out to you and ask you for money. We don't trade other people's money. We are strictly about education in this group. So if you ever get that, somebody contact you and say, hey, I'm Benny or Ryan or Casey, it's not us, right? We don't roll like that. But it's rampant in the internet space. I don't know what they're ever going to do about it, but it's all over, whether it's YouTube, Instagram. I don't even know half this stuff. Maybe I'm getting too old, but it's not us. So just be aware of that, right? And stay on the lookout for it. But we appreciate each and every one of you. We just want this to continue to be a safe space, right? To learn how to trade, right? It's just simple. We just want to help everybody to become consistently profitable traders. Nothing else. That's it. So with that being said, right, everybody have a great rest of your evening or afternoon or morning. Enjoy your Friday, and we will be back 7 a.m. Eastern Standard Time on Saturday for the Forex Weekly ritual to get prepared for the upcoming week. Have a great night, everybody. Take care.
Thank you.
Good night.
Night.
Thank you. Good night.